Well, good day, traders. If we look across the Asian trading session today, it's been a reactionary trading session, obviously following from those strong moves we saw from European equities and also following on from what we saw in the S&P and the Dow markets there. If you have a look at our Asian markets, you can see really strong buying coming through the Hang Seng. That index up 2.4%, the Japanese market up 1.7%. You've got the CN50, the A50 market there in China being traded out in Singapore up 2% as well. And I want to have a look at what's happening in the ASX 200. The market really buoyed up by this weaker Australian dollar. The idea that we're seeing these lower rates coming through, potentially bottoming out around 75 basis points on the cash market. And you've also got a murmurings across trading floors that if we go through 1% on the cash rate, you could actually get a much more great conversation around quantitative easing being acted at some stage from the Reserve Bank. If you have a look at our opening calls for European markets today, they are following obviously from a very strong market there. If you look at our DAX opening calls, the GER 30, you've got that market up 11 points. You've got the FTSE being called up about 8 points as well. There's a bit of momentum playing through there. Obviously, all eyes on what Mario Draghi said in Sintra yesterday. And, you know, our euro flows have been fairly mixed. There's been really no moves playing through there. But our understanding now is that we're going to see a change to guidance in the July ECB meeting. We're probably going to get rate cuts playing through in September, married with a renewed asset purchase program playing through there as well. If we have a look at currency markets, of course, it's really all eyes on what's happening with the Fed meeting tonight. The idea is, of course, is that they're not going to cut rates at this meeting. They're going to wait till after the G20 and be a bit more reactionary, have that flexibility in the statement. But at 82% price for a July cut, they really do need to open the door or we're going to see big disappointment. They really need to give us a clear indication that they've got that flexibility to cut if we get more weak non-farm payrolls numbers and also what happens in the G20. But certainly the appetite there for disappointment is certainly high with 82% priced in. We're watching dollar yen, we're certainly watching the dollar crosses, and certainly we're watching front-end yields and what's happening with equity markets. But the risk of disappointment is high. Obviously all eyes on that Fed meeting tonight.